Executive Director with the CFA Society Pakistan. I'd like to welcome all of you to this webinar on exploring the startup transformation in Pakistan. And for that, we have the CEO and founder of Sarmayacar, Mr. Rabeel with us. Today's webinar will be moderated by Mr. Osman Hayat, who is perhaps well known to you. He's ex-SCCP, ex-CEO Audit Oversight Board. He's also a columnist in Dawn. But before I begin, I'd just like to quickly run over the housekeeping rules. Today's session will be for 1 hour, including questions and answers, and all participants are requested to stay muted for this session. Also requested to keep your videos turned off, and you can post your questions in the chat box, and the moderator will take your questions in the end. And we will be recording the session, and it will be posted on our website and our YouTube channel for your later views. Thank you, and over to you, Usman.
Okay, thank you, Sarvat, and welcome and assalamu alaikum to everyone again. Let me start with a little bit of good news, which is courtesy Rabeel. And the good news is the format for today's webinar is entirely Q&A. So this is a good opportunity for everyone to ask questions. And as moderator, it will be my job to try to pose as many questions to Rabeel as possible. So we have a chat function, as you can see on the right. So if you could write your questions there, and I'll keep picking these up from there. Another little bit of good news is that we have quite a bit of interest in today's session. So we had more than 200 registrations for this webinar. And quite a few of us are already joining, and I'm hoping that it would be a lively session with lots of questions being posed. Now, with that said, let me briefly introduce our speaker today, who's Rabeel Warraich. He's a prominent name in the venture capital and startup setup. Many of us would know him already. He's the founder and CEO of Sarmayacar. He's been educated at Oxford and MIT, and he has worked in investment banking and private equity abroad before he decided to come back to Pakistan in 2017 and start with Sarmayacar. So Rabeel, welcome. And I have a few questions to get us started, and then we'll start taking up the questions from the participants. So to start off, if you could tell us a little bit about Sarmayacar and what was your motivation to leave your life in the West and come back to Pakistan and start Sarmayacar.
Thank you very much, Usman Saab, for having me, and for Sarva for also organizing this. Pleasure to be here, and hello, everyone. I think really the start of the journey was driven by the opportunity that seemed apparent in Pakistan at that time, but to which, at least in my mind, there wasn't a structured approach. What I mean by that is really that investments had been taking place in Pakistan for a while, but the notion of professional venture capital structured with the right kind of governance and with the right incentives in place was not taking place in Pakistan. So when early stages of the ecosystem were coming together starting in 2012, 2013, when the first wave of incubators and accelerators got set up. But ultimately, as we know now, we're a mobile first economy. So when 3G and 4G got enabled in 2015, and some of these underlying startups were starting to get traction from then on. There was a large supply-demand imbalance that was created for venture capital. Maybe the comparison I can give is against India. And if we just take just 2019 stats, which is still 3 years after the opportunity started to emerge, we in 2019 Pakistan saw less than 20 million of venture capital get invested in the country, whereas India had almost $15 billion. And if you look at the population scale difference, where maybe 1/6 of the population, again adjusting for purchasing power, we might be like 1/9 or 1/10 of their economy, but the venture capital that was getting invested was about 1,000th the factor of India. And but that did not represent that people in this country were not looking for the same conveniences, the same kind of ease of life or ease of kind of opportunities in the country that India was. but there was just not enough supply of venture capital. So in 2016, at that time, I, together with a few friends from my own network, we decided to set up a structure which would provide early stage financing to startups that were showing some traction. And the idea was really to introduce the notion of professional venture capital to Pakistan, which of course now has seen many step changes since then as well. So that was really the origin of the opportunity. It was driven more by the opportunity rather than saying, oh, I had to come back to my parents or come back to my family. All of those were added benefits that I managed to get in addition to the opportunity that I saw.
Excellent. So Rabeel, a lot has happened in recent years, as you explained. There was this supply-demand gap, but a lot has happened in recent years. How would you describe the big picture as of today in terms of some of the big numbers of the state of the startup and the VC market? How does it look like today as of now?
Yeah, so we've seen just last year has seen a step change. To put it in context, we saw over $350 million get invested in pure VC in Pakistan last year, which is more than the previous 6 years combined. So there's been a very big step change. But what is also apparent from that is that this is spread over a bigger base. So a lot more companies are getting funded, but also individual companies are now starting to see larger rounds being raised. And that's a natural function of how this asset class works, which is as you go from stage to stage, as your scale increases, the capital requirements typically also increase. So I would describe as an overall ecosystem, we're approaching the Series B stages of the fresh wave of startups. A lot of the capital that has come into the country or has been invested by local participants has been seeding these businesses, maybe extending towards the Series A stage. But with the advent of international players, now we're starting to see some of the Series B rounds also come together. And we're still some time away from seeing a wave of exits happen. But I think otherwise, in terms of direction of travel, we're certainly moving forward in terms of different stages. But still, if you look at the overall demand and overall supply, we are still some way short of us comparing to other comparable economies in the world in terms of the percentage of our GDP that is made up by venture capital investment. We're still much below that 1% mark that ideally we should be trying to get to.
Excellent. And now you've drawn comparison between VC in Pakistan and some of the other countries. You mentioned India. How would you compare VC in Pakistan with some of the other segments in Pakistan? For instance, and I'm talking about the relative state of development. So for instance, if we take the stock market or the secondary capital market and you compare VC, how would you compare that?
Yeah, I think that's a great question, because this is often something that is brought up in context of exits that being possible in the country as well. And I think right now, what we've seen in the last year, the development of the venture ecosystem or the private market funding landscape has done better than what our public markets liquidity would suggest. But that's not to say that we are already kind of like at a level that some of the other comparable countries to our kind of size have experienced. But I'd say maybe our public markets are still a little bit shallower compared to where some of the venture funding that is coming into the countries would suggest as possible exit avenues. So to answer your question, I think this sector has attracted a lot of attention, which has seen a lot of capital flows into this sector, which is assuming that there is further development of the secondary markets or public markets in the country. But there's a lag effect there. And we're not yet seeing that expansion on the public side as we have seen on the private side.
Interesting. And now when it comes to startups and VC, there is a lot that is said about entrepreneurship. And, in US, there is this thing about the American dream, which is that regardless of your circumstances at birth, you can make it big, you can be very, very successful. So in Pakistan, do we have a similar enabling culture? Is there a Pakistani dream that people are chasing in, or they're happier with their corporate or government jobs?
Yeah, so interesting question, because I think for the first 60 years of our independence, the Pakistani dream was to get out of here as soon as possible. And I think that is getting reversed a little bit, because obviously what we've seen in the recent years is the notion that entrepreneurship being a viable career choice is starting to take hold. What that means is that no longer is the only avenue available to a fresh graduate coming out of college to go into a multinational or to go into one of the telcos or one of the established banks to provide them the job security that they're looking for, because at that time, that trumps some of the other elements around experimentation or trying to do what you like doing. We're getting trumped by those factors. That's no longer the case, because what this influx of VC has done is it's given people options to go out and try building something new, something that might be linked to a traditional industry, but might have a certain digitized aspect to it, which gives them an avenue to either improve efficiency or to remove kind of costs, or to just provide additional convenience to people. So the Pakistani dream has evolved from let's get out of Pakistan as soon as possible to let's try to build something here which requires tools and resources that might not all be present at one point over here, but which are increasingly becoming available. So is it worth our while to leave the country and try to establish something outside and then think about coming back to the country? Because ultimately a lot of people have their roots here and their families here, and also the possibility of creating impact is also possible here. So I think that shift we're starting to see. There's this term which we use called the Wapistani effect, which is also starting to kick in, which is a lot of those people that have seen that grass, which is supposedly greener on the other side, are now saying, well, it might not be that much of a gap in terms of the opportunity that is available in Pakistan versus them going to a bigger pond, but then competing with a lot more people to establish themselves and create some wealth, get experience, have some impact. I think they're starting to see those opportunities within Pakistan. And as a result, we're seeing less outflow, maybe more of the diaspora returning. And certainly from a spectrum of opportunities around the world, Pakistan is now as interesting as many other places might have been considered over the last decade or so.
Now that's interesting. That's quite a positive take on on entrepreneurship in Pakistan. But I think one of the things you earlier mentioned and the buzz that we see in the media, it appears that it is foreign investors who are driving the VC and startups in Pakistan. So are they more optimistic about Pakistan than the Pakistani investors?
That's a good question again. I think it's a function of also scale, right? Like if you look at of the announced funds that are present in Pakistan or are focused on Pakistan, we in aggregate make up maybe $100 million in total of deployable capital. If you look at some of the larger funds in Silicon Valley, sometimes their single investment is more than $100 million. And so naturally, the noise that gets created when international investors are starting to look at an ecosystem is oftentimes greater than what will emerge from local capital that is being unlocked or from locally focused funds. So part of it is also just, again, based on social media, what appears to be the key driver of the opportunity. But what I would like to emphasize is that very few of these large funds, particularly the ones that grab names, very few of them would enter an ecosystem unless there was some healthy base of businesses being seeded by local players or with local funds also being present in there. And even in our portfolio, we see international investors get more comfort if they know that there are some people involved locally that have some eyes and ears on the ground, that have maybe been involved from an earlier stage with these businesses. And so it gives a certain reinforcing comfort to international investors as well. But by scale of investment or by size of investment, I think there is no comparison really. I think we, as locally focused funds, are certainly much smaller than the larger international ones, and will continue to remain so in the grand scheme of things. But I still play an important part in doing the hand-holding at the very early stages. until a point at which these international investors can say, okay, now these entrepreneurs have raised capital a couple of times, they've grown their businesses, they are demonstrating an ability to attract teams and retain them. And at that point, they've shown more willingness to then participate in the ecosystem. So you can't take either one out.
Excellent. And in terms of the startups and them getting the funding, so in your experience, in your view, at what stage of their development most startups have been able to attract VC in Pakistan?
So far, it's primarily really seed stage and maybe going on to Series A stages. As I was mentioning earlier, we don't have many companies that have gone beyond Series C, D, and towards an exit. We've, again, maybe a couple of examples of exits tied to Pakistani founders or companies that had material presence in Pakistan, but were also present elsewhere, such as Careem. Or we have examples like Daraz being acquired by Alibaba, which again, I would say almost came up in the previous iteration of venture-backed businesses that were coming up in Pakistan. Of the fresh wave, and this we count really from the 2018 period onwards, we're still approaching those Series B stages. And I think most of the funding that has gone in, both from local and international folks, has been Series Seed, Series A focused. At the pre-seed stage or the angel stage, the size of the company is such that it's often not worthwhile of larger international funds to be dedicating a team to look at that opportunity and investing capital, because the size of their deployment also matters, right? If they're writing larger checks, the companies need to be at that scale and stage to be able to take those checks. And I think we're only getting to that stage right now. It's not something that we've already been at.
Excellent. So you mentioned that foreign investors, they have more funds to allocate and they can write bigger checks as well. What, in your experience, are the return and expectations of these investors, and what sort of a time horizons do they have?
Very good question, and not an easy answer to this, because when you enter venture or when you look at venture, the model requires you to be targeting outsized returns. And that's just tying into the risk associated with this asset class. So the general rule of thumb is that if you're investing in 10 companies about equal sizes, you need to assume that 8 or 9 of those are going to fail. And so the one that works, you want that to return 10x plus, so that you can at least return the original capital. In reality, though, at least basing it off of the most recent valuations that we've seen in the market, maybe those valuations are a little bit ahead of fundamentals. And what that means is that if you're entering at a higher valuation, then your return expectations should be a little bit lower. Because if the outcome is going to be similar, then obviously the return that you make is naturally going to be lower if you're entering at a higher valuation. I would say that sensitivity of international players is a little bit less to valuation, because what they're doing is they're drawing some parallels to other large markets that they've seen, such as Indonesia, Egypt, and then maybe trying to see if similar sized outcomes would be possible in Pakistan. Our view around this is a little bit different, which is that Pakistan still does have certain ecosystem challenges that some of the other places might not have had, one of which remains the availability of follow-on capital. And so that means that the valuation that you can put on any business needs to be in line or maybe at a slight discount to some of these other ecosystems that had an easier path in terms of securing follow-on financing, or the regulatory landscape, or just more broadly experience of entrepreneurs and their willingness to share with others. So I would say that starting off, every VC investor will say that they're targeting the kinds of returns that I mentioned, which is ideally for a seed stage situation to target something like a 10x on the investment over a I would say 5+ year horizon. But how that translates into actual investment returns, I would imagine is maybe a little bit lower for the most recent vintage, but this might get corrected this year given the the slight dampening effect that we've seen on the global public markets, which will naturally also, I think, also translate into the private markets as well.
Excellent. So one of the questions posed to us by one of our viewers is that, post-COVID, there is a possibility of global monetary tightening and rising of interest rates. So if there is global monetary tightening, would we see, the venture funding by the foreign investors in Pakistan, would we see it shrink, or, you don't see an impact of that?
Excellent question, and I think I think there is a risk there of some shrinkage in terms of the number of participants, but also in terms of participants from abroad that have already written a check, just being a little bit cautious and adopting a wait and watch approach before they write additional checks. I mean, what I'm going to share now is partly a joke, but again, partly. The reality is Pakistani venture is maybe a pimple at the end of the tail, which, if things go bad, is going to be the first thing that gets popped from a risk perspective. So if there's globally risk off, then people are going to start pulling away from certain markets. By pulling away, of course, they can't retract any investment or commitment that they've already made. All that means is that they're going to maybe apply a higher threshold or requirements to be able to invest in more companies, or they're going to choose to do just follow-ons in companies that they've already invested, or in some cases just say we're going to halt for a bit, see how their existing investments pan out, and then off the back of that either commit more or just keep whatever exposure they have currently. What we're seeing right now in the global markets and with the interest rate environment, I'm not sure if we've seen the entirety of that play out either yet. So how that evolves in this current year is going to drive a lot of that, is going to drive the answer to that question, which is how does Pakistani venture fall in their spectrum, and whether they continue to take exposure in the market. But I don't think we're going to see a fall off the cliff. To answer that question a slightly different way, and sorry to give a longer answer than was necessary, by amounts invested in venture in Pakistan, we might still see a substantial increase to last year. And that's, I think, going to be driven by maybe just a few handful of large scale companies that are just going to raise their next rounds, which are just going to be twice or thrice the size of their previous rounds. So to use an example, if Airlift ends up raising 200-300 million by itself, then the 350 million figure that I shared from overall Pakistan last year might look tiny in comparison to that. But what we also need to see concurrently is how many businesses are getting funded and how big a base of those startups that are approaching Series B is getting created, so that we can have a view or visibility in terms of what happens in the future if those companies are able to perform.
I get that. Now, one of the questions which has been posed by one of our viewers is that what about true innovation in Pakistan? Because some of the startups, if I've understood the question correctly, is more of a copy from international paste in Pakistan, and hopefully it would work. So are there also examples of true blue original innovation in Pakistan?
Very little, unfortunately, I have to say. And it's a function of what the demand in the market is, because what investors are also looking to back are tried and tested models that haven't even been experimented in Pakistan. What investors are going to be a lot less willing to back are global breakthroughs coming out of Pakistan, because we don't necessarily have any, call it competitive advantage in any field, which would necessarily put us ahead of Silicon Valley, like India, China, Israel, these ecosystems. To use an example, when you look at the Israeli ecosystem around venture, you see a flurry, a number of cybersecurity startups come out of there and do well. And recognizing their strengths, the government has a dedicated program towards it. They've given first loss assurances to investors that invest in certain sectors. We haven't seen such a coordinated approach in Pakistan yet. And maybe that's a function of like, the talent that exists being spread across many different sectors rather than being focused on one. But also, typically when an ecosystem is coming up, you normally see the infrastructure like investments in the ecosystem get funded first. So right now we're still going through like, the basics, like, the fintech kind of payments layers. We've gone through like, the logistics businesses that have gotten funded. And only now we're starting to see some of the subdomains within fintech, like buy now, pay later, or early wage access get funding. So I think it's going to be a while before we see like, specialization emerge out of Pakistan, which can also then be truly disruptive or innovative in that space, and then maybe have global facing products that are coming out of Pakistan. I think for the time being, it's going to be primarily focused on opportunities which are addressing a very consumption oriented population, which is young, and which is seeing those consumption patterns move to digital first sources. So that's really how I define the opportunity set in Pakistan. It's consumer tech for now, and really playing on that growing population and coming from a young base, and choosing to do digital first avenues, use digital first avenues for their consumption, like ordering Uber and Careem, or like ordering from Food Panda and sources like that.
You touched upon the role of policy and government and how it can facilitate venture capital and startups. So one of the questions posed to us by one of the participants is, if we can start with the legal framework. So what's your view on the quality of the current legal framework as regards startups and venture capital? What has been your experience? Is it good enough?
Very good question again. I think the starting point was slightly weak, and I'm going back to maybe like 3-4 years ago, where the regulations that were currently in place at that point did not really facilitate, for example, creation of a local venture capital fund, or even having your startup be domiciled out of Pakistan and continue to remain domiciled out of Pakistan for X number of years, even when you have to attract international investment. But the change over the last 2 to 3 years has been tremendous. And it's been a multi-pronged approach, like, State Bank, SCCP, other regulatory authorities have been wanting to make it easier to both raise capital and to also then be able to set up structures that then facilitate capturing of whatever value that is getting created. What I mean by that is simple rules like setting up holdcos abroad. If you're a Pakistani founder, previously was not even possible. As a Pakistani tax resident, you were not allowed to own equity in a foreign domiciled company. But that consideration originally was there because the government and these authorities did not want dollars flowing out of Pakistan to buy stakes in these companies. But when you're setting up your own venture, it's really sweat equity that you're dealing with. There's not money flowing out of the country. So a lot of those things have since been changed, and it's been a fairly methodical approach that has been taken, where industry participants have proposed specific changes to legislation, to drafts of manuals that have already been in place for many, many years. And those have then been pushed through by the government, by State Bank, to facilitate more capital coming into the country and for more founders to have the option of setting up their holding companies abroad. There's a lot left still that needs to be done. And we also recognize, and again, I hope I don't get into trouble for saying this, these things also make the government and authorities look good. So that's why they're also receptive to them, right? Like the moment there are actors that are trying to take advantage of the system, or then are trying to disguise normal businesses as startups and then setting them outside, and in lieu of those sending money abroad, I think they're going to start asking questions around those. But I think we're not at that stage where the benefits of streamlining some of these things is outweighed by the potential consequences of people acting like bad actors in this space.
Okay, so good to know that the State Bank and the SCCP have done something to facilitate startups and VCs. But what about the tax system? How does FBR come into the play? And are the tax rates and is the tax framework, is it enabling, is it disabling? How would you comment on that?
Very nuanced question and a dangerous one for me, because my response is FPR unfortunately tries its best to not be in the room whenever these conversations are taking place. And I think the one disconnect that maybe I can mention is that the tax authorities or FPR views things in isolation rather than really working with some of these other regulators or authorities to sort some of these issues out. Just yesterday, in fact, the PM announced a set of tax breaks and incentives for what is described as the IT/ITES segment, in which they also introduced capital gains exemption for VCs, venture capital investments going into these businesses. Now, where does that apply really? That applies in the case of the capital gains that are either applicable on a Pakistan domiciled fund or any capital gains that might apply on a company that remains domiciled in the country. There's not going to be many cases of that, frankly, at least in terms of scaled startups. Those often tend to set up their holdcos in a more favorable jurisdiction. And the reason for doing that is because some of these laws, regulations in Pakistan are still trailing the kind of what is considered to be best in class around the world. And if that option of creating these holdcos is not given to international investors, they might choose to not even invest in Pakistan because they might not be comfortable with parking their cash and bringing it into the country without having some sort of a blocker entity or a holding entity that is set up outside. So still a lot of improvement, room for improvement there. And generally, FBR tries to avoid these kind of conversations, but we're seeing them being roped in more and more because that's the complaint that we've been escalating to the PM and other related authorities, that this cannot be resolved unless all participants that touch a startup and that journey are included in the same room. And I think we're going to see some more changes on that front within this year.
So when it comes to policy, regulation, and taxation, there are concerns of the industry, as you mentioned. What forums, are there structured forums like standing committees or consultative groups or anything on those lines? Are they available to the sector to be able to raise your voice in a structured, coherent manner with the regulators and policymakers on an ongoing basis?
That's again, good question. The answer is yes and no. When you say on an ongoing basis, there is no one central, call it, working committee that is looking at all matters concerning startups or venture funding. What tends to happen is there are working committees that are created around specific topics or specific avenues that are being pushed. So for example, myself and people from our firm and other VC firms have been involved with the State Bank on looking at the foreign exchange manual and seeing what in there is preventing us from attracting capital, registering that capital, and then ensuring repatriation of that capital from the country. Those considerations are very different to a startup's ability to pay for Google Maps abroad. Just to quote one example. So there's a separate working committee for that. And a number of these have been both coming up and once a matter is resolved, also being dissolved. So there are frequent opportunities for industry participants to provide their input. And the good thing that is being done by the authorities is they're not assuming that they know the best solution to these problems. What they're doing is they're eliciting responses from the industry participants and then trying to come up with something which is reasonable and fair across the board, and then trying to take that forward. So it's happening. A lot more has happened in the last year than, for example, 4 years ago. And moving forward, there continue to be a lot of consultations. There can continue to be specific committees set up to address challenges that are raised. but there is no one fixed committee or call it set of participants or that are regularly engaging on any one topic.
Okay, so there has been some progress, but we need to wait and hope for a more holistic approach to the industry's problems. Now, coming back to the investors and the startups, what are the investors looking for in the founders? Are there things that we can generalize? Okay, this is what the investors are looking for in the founders.
I think there's certain traits that, like, are if a founder has those, it increases their odds of success. And ultimately what VCs are trying to do is we're trying to see what possibility is there of a large outcome in any particular industry, and what's the best possible team combination that can kind of take the most market share in that particular opportunity and hence generate that larger outcome. And so on that one, if you were to ask me, like, in Pakistan, it's very difficult to make a business here. I think it's easy to maybe raise pre-seed funding or seed funding right now at this stage off the back of credentials, but then to make something with that money still remains very, very difficult. So the traits that I would highlight are, like, again, resilience, grit, again, the ability to maybe charisma to attract people and retain them. These remain very high in our kind of preference list of the traits we want to see in the founders that we back. Obviously, there are other elements that just make a person a better human being and a better leader, such as humility, such as perseverance, and so on. But if I was to pick maybe one trait, I would say grit is probably the most important one, because every day there's firefighting to be done. Being an entrepreneur and a founder in particular can also be lonely. So you want to be able to get up every day, go run through the challenges and survive to live another day. That's something that we particularly look for in founders. Otherwise, it's a combination of the space that particular players are targeting, their previous experience in that space, their general, again, emotional / social quotient rather than just the intelligence quotient. The idea being that, again, you need to make this work in Pakistan, which already has a lot of challenges, and then you're adding additional risk layers to it. And then also raising capital from external investors, which puts more pressure on you. So you need to be able to withstand a lot of those pressures and still deliver.
So grit, as you mentioned, rather convincingly, is a key factor. But for a startup founder and there is an investor, how do you actually communicate your grit? Because it will reveal itself once you've made the investment and the business is going on. But before, when you are deciding to make an investment, so if you could share a little bit of insight in how would you arrive at a judgment about somebody's grit before having worked with him yourself?
Yeah, and this is a good question, because there's always this lag effect, that you see the results once you've already committed and given money in. So what we try to do, at least as Sarmayacar, we like to focus on what the individual has been doing before. And whether that paints a consistent story of learning and persevering in whatever they picked up as their field. So if someone who has hopped around too much, that might signify that they are looking for an easier path whenever they come across a challenge. We'll speak to their friends, we'll speak to their previous employers. We'll try to piece together what they have done in their previous work experience, and to try to come up with a view as to whether they have experienced the kind of grit that is required in a startup versus having had a more comfortable path in maybe a more established company where the compensation was comfortable and they were more directed what to do, rather than coming up with what is it that they want to do, or a new direction. There's no exact science to it. And we talk about VC or generally investments being a relationship business. It's based a business based on trust. And so we need to make a judgment call on individuals and founders and the team that they have collected together in terms of whatever they have done up to that point, and then ensure that we also put certain checks and balances in place, not to constrain them, but in case our call goes wrong based on the individuals that are being backed, that it doesn't then pollute the entire opportunity. And so to whatever extent that's possible, we try to then do that contractually and protect that investment in some way. But the call is one that we have to make based on oftentimes limited information, but just by also being able to benchmark across different founders. So since we've started in Pakistan, we've looked at over 1,300 situations in the country. You'll be surprised that you can draw some parallels between individuals and founders. They come in certain different kind of combinations of factors, but what we now sitting at this point are able to do better than we were, let's say 2-3 years ago, is to be able to tell based on a particular individual's journey, like how are they likely to react to adverse situations that come up, or how are they going likely to perform during fundraising, how effective an operator they are versus a leader leveraging other personality traits. So we try to base it on that. And then obviously the attempt is to always try to back even better founders than we have backed in the past.
Excellent. So when it comes to founders, it seems there's a lot of communication involved. The founders have to get their message across, their traits across in a coherent and convincing way. But does that mean, that people who've done a BBA or MBA, this stuff is really for them? If there's someone who's not very good at English, or he hasn't got a BBA, or an MBA from a fancy university, does he or she still have a chance?
I think theoretically, absolutely yes, right? There's no reason to suggest that someone who has dropped out of college or did not, for example, think that they had to go through further education would be any less of an entrepreneur than one who has graduated. In fact, some may argue going through a very structured learning program of a university might actually make you less of an entrepreneur than some other cases. But the reality is also that, at least in VC, part of the job is storytelling, and it's getting people excited, both investors but also prospective employees. The talent that you want to attract, you have to paint a certain picture of a vision that you have. You need to demonstrate that you have bought into that and are willing to work extremely hard to achieve that, and then to be able to sell that vision to people. So while there should not be on paper any difference or disadvantage to people that haven't had those degrees, it just makes a slight difference around the edges in terms of how polished a pitch is, or how articulate a story is in terms of an individual's own journey and what they're looking to do with their business. That I would say on balance does matter, but I would like to believe that it doesn't. But I think it's we'll be kind of again, maybe being a little bit disingenuous if we say that, okay, we don't look at it completely. With that said, I think it doesn't make a difference if it's an Ivy League degree versus some a top university in Pakistan, or any other maybe relatively unknown universities somewhere else in the world. I think ultimately what we care about is what have they done with the learning that they got from that place? Has that equipped them to be better leaders, to be able to do what they claim that they're doing? And if there's a big disconnect, then that doesn't make sense. So what that means is if someone has lived a cushy life in the US, then graduated from Ivy League and only dealt with that kind of a professional environment, they might not be very well equipped to actually build a business in Pakistan, because over here you have to deal with a lot of on the ground challenges, do firefighting on a daily basis, which they might not be very well equipped for. So there's no the absolute kind of criteria, But I think on balance, someone who's able to tell the story better than someone else might have an advantage in at least being able to raise capital and attract talent.
Yeah, that sounds like, the bet, a lot of the bet is being made not just on the business, but on the founders, and a lot of judgment and communication is involved to manage risk there. One of the questions in this context is by one of our participants is that a lot of this funding appears to be going to grocery and retail models, which do not appear to be sufficiently differentiated. Is this an assessment you would agree with?
Very good question. Very observant attendees on the call today. That is certainly the flavor of the month as we describe it. In early 2010s, ride hailing seemed to be the darling that it was attracting a lot of capital with Uber, Lyft, and all of these coming up. In this decade, it's really been like, this fast delivery, quick commerce elements that are coming up. We have seen in Pakistan maybe a little bit of that lag effect kind of come into play, but when there were actionable opportunities and they had founders that seemed very backable, there was immediately a gold rush into those sectors. And I would argue that now maybe it's gone a little bit too much, where, to use one example, this B2B supply chain, like B2B e-commerce supply chain effectively, there's too many players in that space already in Pakistan. And what that means is both capital has gotten distributed across multiple players, but also talent has. And if you ask me, can Pakistan have 5 or 6 unicorns in just that one space? I have my doubts. I think there needs to be some consolidation, or some of these startups are just going to fail to raise subsequent rounds and will have to then just wither away. So in a way, the answer is yes. I think some sectors have seen a lot of investment, whereas others have been relatively unloved. Going forward, I think that might adjust a little bit, as people see returns from one sector versus the other. But it's also a little bit of like FOMO driven, the fear of missing out from investors. When they see larger players emerging in a particular space, they want to back startups in the same space at an earlier stage in the hopes of getting acquired by the larger players. So a lot of that is also happening. There's a lot of people wanting to tag along to something that already has momentum. There's also a third effect, which we're seeing, which is international funds have obviously focused on many different markets, and where Pakistan might not be an existing market where they're already present. So some of the junior folks at those funds might want to also, for their own internal political capital, want to bring a new opportunity from a new jurisdiction like Pakistan so that they also look good there. Oftentimes, those tend to be smaller checks as part of very big funds. So the management investment committees of those funds tend to not have too strong a view opposing this, because at least on paper, the Pakistan opportunity looks quite interesting. So you do see some of those investments also coming into the country, but I wouldn't say that any one of these factors is greater than the other in contributing to what we just shared.
Yeah, they say it's better to fail conventionally than succeed unconventionally. Some of it sounds like that. So we, obviously investors bring in the money to the startups, but what else do we see investors actually bring to the startups?
Good question. And again, this, I hope I don't get the wrath of other VCs. We all claim we do so much X, Y, Z, but in reality, there's few defined avenues through which support can be provided. Other than capital, I think there's value addition can happen across 3 or 4 dimensions. One is helping with attracting talent, so talent acquisition. Helping with strategy, so just generally in terms of seeing other business models work elsewhere and trying to pick out what might work in Pakistan. And the third key element is really future fundraising, helping with them with future fundraising. Maybe a fourth element is coaching or mentorship, which again takes its own dimensions. each firm will have their own expertise in being able to provide value on one or more of these avenues. And some firms are going to be set up specifically that they don't try to promise anything of that sort, and just naturally would do something like an extension of their own investor network to facilitate future fundraising for those startups. If I was to use some foreign VCs as examples, Andreessen Horowitz is like a very well-known investment fund out of the US. They have a very strong focus on this value addition side, which means that they have like 100+ people, like a 100+ strong team, which is dedicated to portfolio support. And they can be like, from marketing, from like, basic services like accounting, legal, to also product folks that can be tapped into by portfolio companies. If you compare them to a Tiger Global, which is another major investor in the global venture landscape, their approach is completely hands-off. They don't want board seats. They don't want to have to promise value addition to any startups. But what they do is they outsource a lot of their work to a large, big name consulting firm. And so what every startup gets is access to that consulting firm as part of taking a check from Tiger Global. So both of these approaches are quite different in terms of how many people are employed within the firm, but are broadly trying to cover other avenues of value addition that can just support a startup in addition to capital. What I want to emphasize though is that anything that, again, no founder should feel that it's the investor's responsibility to build the business. Ultimately, they're there to support. And oftentimes what we've seen work better is what's the pull factor from the startup rather than a push factor from the VC themselves. Because if a VC tries to apply, let's say, if we take our own example, if we try to apply the same formula to every single company in our portfolio, which are all at different stages, which require different things, which might have gaps in different areas, it is bound to not work very effectively. Instead, what we use is like a pull factor approach, which is according to whatever the requirements of a particular startup are, we then analyze whether we can provide that support, or if not, then can we bring someone on board or connect them with someone that can provide that support, rather than just saying, okay, this is a formula that we apply across, because that very, very rarely works.
Fair enough. So we've discussed what investors may bring in addition to the capital in terms of support, expertise, and other things. But what about controls and systems? When the investors have put in the money, what do they usually do in the Pakistani context to ensure that the money is used for the intended purpose only and is not being diverted to any other thing?
Good question. And this was when I mentioned at the start of our conversation that the notion that professional venture capital was not being invested, or at least venture capital was not being invested in a professional way, was really referring to both ownership stakes that were taken by investors previously, which was to suggest that they thought that the only way that they can have some influence on the strategy of a business and ensuring that the money that they've raised is spent wisely was to take a control position, so a majority stake in that business. That is no longer the case, and that's not the case with venture anywhere in the world. With minority investments, of course, the actual controls that you have are fairly limited and typically can only be exercised in the form of board representation combined with some reserved matters that we do see in some of these agreements still. But in reality, the way it works is it's trust-based, based on the assumed outcome that the founder is also looking to make something out of this. And instead, if the founder was channeling the money elsewhere, that the outcome that they would get or the money that they would be able to make that way will still be smaller than what a successful outcome could look like. So what happens is that you will have contractually agreed thresholds. You'll have certain reserved matters. You'll try to set up certain approval thresholds for flow of funding or release of funding from master accounts in the holding entities to the local subsidiaries. So there are certain things that can be done this way, but it's really about how actively that is being monitored by an investor, and whether, like, overall collectively a bunch of different investors can put in place certain checks and balances that allow for that startup to, or that founder to continue to have freedom to, like, again, build that business, but at the same time have some sort of a governing framework in the form of a board that continues to monitor it overall. I should say though, is if someone is set out to be a cheat and a fraud from the beginning, they will find their avenues to make some bucks here or there. But whether or not that's in the grand scheme of thing a better outcome than them working towards, like, building a scale business and achieving an exit, we haven't seen that work out anywhere, unless it's like, massive kind of pyramid scheme, which I would imagine that one or two investors might get fooled by, but not, like, too many.
Interesting that you explained that. So a related question to that, you mentioned trust, and of course we are discussing investment, and we want, a multiple of 10 over 5 years. Many people are looking for it. But what about failure? What sort of a failure rate have you seen in Pakistan? So let's say of the 100 startups that managed to attract funding by VCs, how many were operational, let's say, after X years?
Yeah, and we still have to see that, like, play out, because the majority of investment that has gone into the recent wave of startups only happened last year. And I think one of the things that I do suspect might happen in Pakistan is that businesses aren't killed quickly enough either. Like, they keep kicking the can down the road. They go on lifeline support, as we call it. And what that means is that they're not able to attract additional financing because their growth is flatlining, or in some cases also, like, maybe they might be reducing in scale. And that basically creates a self-perpetuating effect where it looks less interesting, so no investment comes in. And if no investment comes in, the startup can't really show growth and can't retain talent. So I would say that at each stage, you would typically, like, be seeing almost like, a 50-60% drop off at least. So see, of all the Series A funded ones, let's say if 100 of them have gotten Series A funding, I would be like considering like even 25 or 30 of those that get Series B funding to be a fairly high success rate. Typically what you see is across all startups, let's say, regardless of stage of financing, almost like 80% plus tend to fail. Of course, this can be different in different sectors. We have to see what the Pakistan numbers translate maybe in 3-4 years time. But as a general rule of thumb, I'd say even if a quarter of the ones that have gone to a certain stage then get financing properly for the next stage, that's a good ratio.
Okay, great. And what about information? Because you said that a lot of this is new, and things like failure rate have to play out over time, and I get that completely. But at the same time, it seems there isn't exactly a lot of information available in terms of data. Of course, because this is this is not the listed sector, so the data is going to be scarce. But are there initiatives to put together meaningful industry reports and data on VC and startups in Pakistan?
Yeah, now we're starting to see a lot of that happen. Initially, there was hardly any data. I2I were one entity that were preparing these Pakistan entrepreneurship ecosystem reports. Previously, I think there was one in 2016, maybe one in 18-19. But now we're seeing also international players like Magnet prepare every quarter. There's a report in Pakistan as well. And then obviously that gets aggregated every year. We do have reasonable visibility of the investment announcements that are taking place. These are getting captured. There's also a tracker by I2I, which captures every new investment that's coming in. how much of the information of what's happening inside startups that remains a little bit limited or patchy, because every firm has their own kind of like, and they hold their cards close to their chest. Funds are not very keen to share information on their portfolio companies with other competitors either, understandably so. So while we have information which we can base on the data that we get from our portfolio companies, and we can correlate that to industry-wide data from these reports, there are certain gaps in the middle which one just has to kind of like take a call on, or assume that as the ecosystem gets more mature, we're going to plug some of those gaps too.
Okay, and on that note, there is a question that has been asked about startups that are led by women. Do you see, some of those, and are they treated any differently compared to other startups? Are they expected to have a different success or failure rates compared to the, male-only led startups?
I think there should absolutely be no difference in criteria, but in what actually translates is much lesser investment going into female-founded startups than compared to their male counterparts. This is not just a Pakistani characteristic. I think this is a problem globally, and just more generally in terms of women in tech being fewer. I think there's a few different factors to it, which I don't want to get into, but I think what is our experience in Pakistan is no offense to the men on this call, but we feel that grit point, the resilience point is maybe even higher in females in Pakistan, because they already start with knowing that they have to deal with so many challenges. I mean, just imagine getting to your work and the commute. If you, I'm a Pindi boy, so I'm used to these these wagons that we had in Pindi, and over there you'd have the two front seats be there for females, and the 11 or 13 seats that are in the back be all for men. And just that commute journey is such a difficult one for females. So imagine what they have to put up with to make themselves known, to achieve success in their career, which if they were given the right tools and the right environment, imagine what kind of businesses they would be able to build if they apply the same kind of resilience and grit. But unfortunately, we just see many fewer female-founded businesses approach us, even though we have a dedicated a portion of our fund or pot of capital from the VFI initiative, which is the Women Entrepreneurs Finance Initiative, part of the World Bank Group and IFC and so on. But it's just the plain numbers are completely different in terms of the deal flow that we get from male-founded businesses versus female-founded ones.
That's a great point. I'm a Pindi boy myself, and I can completely relate to what you said, that a woman just getting from home to office, she's already faced a lot of adversity. So it's, she's already done a lot, and she's already proven herself in that way. That's borne out by a real life experience. Now, we're getting into the last few questions as we are probably at the end of our time. But what sort of, what would be your top picks in terms of websites, conferences, or other network opportunities that startup founders and investors should go to find each other, and people who are looking for employment in this sort of context should go to?
Good question again. So there's 2-3 platforms which are doing great work. One is more of a network that has been created under the umbrella of Pak Launch, which originated with international investors and professionals of Pakistani origin being connected to the local ecosystem. But a lot of investment has been raised from those platforms as well. And a lot of founders are now on those platforms, so providing a conduit or a connection between more developed ecosystems in Pakistan. There's also dedicated, call it event organizers focused in the space. There's this Catalyst Labs out of Karachi, led by Jehan Ara, who's a legend in our circles. They used to do the O21 conference every year prior to COVID, but now this year they're going to it's going to return. It's going to, I think, be called +92 this year. Then in March, there's a Future Fest coming up in Islamabad, again, a 2-day event, which is all meant to connect entrepreneurs and investors and stakeholders in the ecosystem, bringing them under one umbrella or one location to facilitate more interaction. Otherwise, my general advice would be to just reach out to people. I think like the idea is really that if you already have a sense of what you're wanting to do as an entrepreneur, there's websites of like each one of the funds that are active in Pakistan, even the international ones are fairly present in on social media. They encourage people to reach out to them. And I think that the learning journey for each individual has to be combine a few different sources and a few different initiatives that they themselves take. But there is no one single event that I would say like is going to just give everyone like, you know, all the information and they'll know exactly what to do next. I think it really leads from the first conversation they have with someone to then being more directed and focused in terms of who they follow up with. And that then mushrooms into like, you know, a lot of learning.
Okay, great. Now there are a few more questions which I'm afraid I would have to leave unaddressed, but on a lighter note and on a closing note, there's a question by a participant is that if there's a Shark Tank Pakistan, are you up for it?
I'd love to be up for it. I was present. I used to participate in what was called this show called Idea Karoron Ka back in the day, which I think was loosely based on that. But I think that'd be a very interesting avenue, because what media does is it again just like, you know, spreads that message like, you know, to people all across the country. Like this opportunity is not restricted to people in Karachi, Lahore, Islamabad, or people who are part of the CFA society or people who us on social media. This really needs to be across the country, because you don't know where you're going to find the next gem from. And I think what programs like that do is it just encourages those people to dream. And if you dream, only then can you take steps to kind of fulfill that dream. And I think that's really why, like, you know, those avenues are important. And if the opportunity came up, I'd love to.
So there has to be a Pakistani dream, just like an American dream. So thank you, Rabeel. Thank you so much for your time. We've covered a lot of ground. I hope the viewers, our listeners have enjoyed it as well. So thank you, everyone. And Sarwat, back to you for closing.
Thank you so much, Rabeel. Your energy on the screen has been absolutely contagious, and it has been a very insightful session. Thank you so much. Thank you, Usman, for your very, very well-moderated session. Thank you for your time. I would request all the participants here to please share your feedback with us. You can use this QR code, or you can use the link which has been shared by my team on the chat box. And we hope we'll be able to host you more often. And thank you, everyone.
Thank you for having me, and wonderful questions, and also moderation from Usman Saab. But